Welcome to our Chapter 1, Introduction to the World of Forensic Accounting. We are going to start off with our learning objective is to explain what forensic accounting is. Let's start with an introduction. On April 23, 1930, the Chicago Crime Commission issued its first public enemies list. At the top of this list was Al Capone, one of the most notorious gangsters in U.S. history. They were unable to convict Capone on murder. The U.S. Attorney's Office aggressively pursued criminal prosecution against him in an effort to restore respect for federal laws that had been eroded because of this gangster class. On March 13, 1931, a secret federal grand jury issued an indictment against Capone, charging him with tax evasion for the year 1924. Capone maintained no bank accounts, kept no activity records, bought no property in his own name, conducted all of his financial transactions in cash, and never filed a tax return. Additionally, Capone's reputation for violence created this disincentive for any potential informants. So development of the case against Al Capone was assigned to IRS Special Agent Frank J. Wilson. Wilson's assignment was to find evidence that would persuade a jury beyond a reasonable doubt. So the testimonial evidence gathered by Wilson was compelling, but not convincing beyond a reasonable doubt. So the government's challenge was to explain to the jury the complexities of accounting and tax in a manner that was not only persuasive, but could also withstand the test of cross-examination. So meeting this challenge head-on, Wilson developed and presented to the jury a calculation of Capone's unreported taxable income using the net worth method. So how you start the net worth method. Step 1, you determine the ending net worth. Step 2 is you determine the beginning net worth. Step 3 is to calculate the change in the beginning and the ending balances of your net worth. Step 4 is you determine expenditures. Step 5 is you calculate the total acquisitions and consumption. Step 6 is you determine reported income plus legitimate sources. And lastly, in step 7 is you calculate unreported income. So on October 18th, 1931, Al Capone was convicted of tax evasion for the years 1925 through 1927 and failure to file income tax returns for the years 1928 and 1929. He was sentenced to 11 years in federal prison, fined $50,000, and charged $7,692 for court costs, in addition to a tax loss of $215,000 plus interest. Now let's explain what forensic accounting is. The term forensic is defined in Black's Law Dictionary as used in or suitable to courts of law or public debate. So we can define forensic accounting as the use of accounting theories, principles, or analysis in a legal action, often through expert witness testimony. Forensic accounting involves the application of accounting, finance, economics, statistics, law, research, and investigative methods in the collection, analysis, and communication of findings. So given the adversarial nature of litigation, the role of testifying as a forensic accountant is not suitable for everyone. So the term forensic accounting was first used by Maurice Pellevat in 1946 in the Journal of Accountancy to recognize and celebrate IRS Special Agent Frank J. Wilson as the man who brought down Capone. Now let's discuss the mindset of a forensic accountant. Forensic accountants have to be researchers and problem solvers. They need to be intellectually curious. They need to possess a restless mind, one that is never satisfied with their understanding of an issue, regardless of their experience or expertise. Forensic accountants have an instinct to explore problems that challenge conventional wisdom. More importantly, they have to be willing to question their own pre-existing judgments and conclusions. Not only do you need to have a curious mindset, but as a forensic accountant, you must also embrace a systematic thinking. Like, forensic accountants recognize that problems are not always attributable to just negligence or misconduct. Instead, these problems could be indicators of a broad systematic failure within an organization. Forensic accountants do not rush to judgment. They have to take a second look, and they look beyond the numbers. Forensic accountants have to exercise a healthy dose of professional skepticism, similar to what auditors do. This reflects a provocative, questioning mindset where nothing is as it seems, and trust but verify is a rule of thumb.